Welcome back to another edition of Fintech Fridays. I'm Brian Vieaux, President, Chief Operating Officer of FinLocker, and pleased to have with me this afternoon. I've got Rutger van Faassen from Curinos. Rutger, I knew I wouldn't get it. Welcome to the podcast.
Thanks for having me, Brian.
Yeah, it's great that we're able to connect and get you on here. I have some experience and knowledge of Curinos, but honestly, it dates back probably 6 years before I got to FinLocker. And as our business evolves rapidly, I imagine a lot's changed with the company. But before we get into Curinos and what you all do for the industry, why don't you share your story and kind of how you came about the mortgage industry?
Yeah, that goes back quite a ways. As you can see from my last name, I'm originally from the Netherlands. That's where I was born and raised. I started off my career at a company called ABN AMRO Bank,
Right.
which at the time was a large global bank with the headquarters in the Netherlands. Started off there and ended up moving to the United States, working for the ABN AMRO Mortgage Group in the U.S. ABN AMRO also owned LaSalle Bank at the time and Standard Federal Bank in Michigan.
That's my
And
hometown.
InterFirst was a big portion of that organization. So worked very closely there with the leadership team until the point came where ABN AMRO was acquired by a group of European banks. And at that point in time, the mortgage group was spun off because ironically, Bank of America had indicated they were interested in LaSalle, but not interested in the mortgage group. And they ended up buying LaSalle Bank without the mortgage group. The mortgage group was sold to Citi.
Yeah.
And I think it must have been like 5 or 6 weeks later, Bank of America was forced to buy Countrywide.
Yeah.
And I don't know, maybe hindsight's 2020, right? But maybe they would have been well off also having the book of ABN AMRO, because it was a very clean, very neutral book. Not a lot of ninja loans, a lot of very solid 30-year fixed mortgages. So that's how my career in mortgages started off. I then did a stint at a analytics company called Nomus Solutions. It was a Bay Area startup doing price optimization, working with a lot of lenders, mostly actually home equity lenders and auto lenders and unsecured personal loans, both in the US and in Canada. Help them sort of understand price elasticity and how to set rates for the right outcomes. And then during that time, I partnered very closely with a company called Icon Advisory Group, which that might be the name that you remember from Lenders Benchmark. That's where that started, at Icon Advisory Group. They partnered up. They were acquired by a company called Informa, who I then joined. And 2 years ago, Informa acquired or spun out a portion of the business, acquired another company called Novantis, combined those two, and named them Curinos. So that's how we got to Curinos, and that's how I got to where I am today. I am physically, I am in Brooklyn, New York, and have been here for the last 16 years.
Got it. And just to tie a bow around your original mortgage experience, what capacity did you fill for ABN in the mortgage business?
Yeah, I did different things. So first, I worked out of the Netherlands with the team in the US. We actually copied some of the, at that time, very popular securitization models, and we actually leveraged that in other European countries to originate, to then securitize loans, which was not something that was very commonly done in Europe.
Right.
Most of loans actually sort of ended up balance sheet at the lenders. So we actually leveraged some of that. Now, obviously, after the banking crisis, that went a little bit out of style, or that wasn't as popular anymore. That's actually when I moved to the States and worked very closely with the leadership team there. So also worked out of our Sunrise, Florida office.
Yep.
ABN AMRO had acquired mortgage.com. So we had that whole platform with the inside or inbound, outbound call center. At that time, it was still very much a refi market.
Yeah.
So we were very active in reaching out to people, getting them better rates, and taking inbound calls from people that realized that they had an opportunity.
So our audience, some of our audience may not even, recall that there was a company called mortgage.com.
Right.
I'm pretty sure that URL is owned but not utilized by Citi.
That's right. Yep.
And among the many wonderful people that kind of came out of that platform, a lot of people are probably familiar with Garth Graham, who's now with Stratmore.
Yep.
Garth was one of the early folks at mortgage.com and still lives there in South Florida.
Yeah, worked very closely with Garth there during that time. So yeah, those were fun times in Sunrise, Florida.
Right on. So there's our history lesson, and now let's kind of learn about Curinos. I will say you brought up Icon, so that was my familiarity with the company. Was when it was Icon. I ran the third-party origination business at Flagstar Bank, and we were a subscriber to the benchmark reports at the time. I mean, we reviewed those 3 times a week, right? Because we used those as part of our kind of pricing profitability strategy in terms of the rate sheets that we pushed out for our third-party originators. Let's talk about what Curinos is doing today for the industry, and just kind of start digging into that.
Yeah, very, very much still that benchmark element is a key element to that, because we do believe that by understanding your relative position in the market, you can make better decisions, right? You can look at your own data all day long, but you live in a competitive market where other players constantly make changes, and even if you don't make a change, by others making a change, that impacts your business dramatically, right? So you always need to understand, hey, how do I stack up? So we still have the Lenders Benchmark platform. It's now one of our analyzers, where you can analyze the market, understand what your relative position is. It is very powerful because it has sort of data that is sort of transaction level, so locks and fundings and all the deal characteristics are in there. So it really allows you to understand metrics like, hey, what is my cycle time and how does that compare to others in the market, right? If your cycle time is 10 days longer than everyone else, you might have a great rate, but people sort of say, this is taking too long, right? I have another offer, which might be an 8, a quarter, may even like worse, but they can deliver on it. So things like that are very important. Other things like pull through, right? Like of all the applications that I get, of all the locks that I get, how many actually fund and how does that compare to others? Understanding your mix of whatever volume you're getting in of applications, of bookings, how does that compare to the rest of the market? And then you must have used it as well to sort of like this weighted average market price, right? Which is very important to understand, kind of like, hey, how does my pricing stack up? Am I in the range? Am I really competitive? Am I maybe too competitive, right? Am I giving away margin? Or am I uncompetitive and therefore I'm just not getting the result I'm looking for? That combined with sort of daily rate sheets, right, that we get, that those two elements together are very powerful in understanding where you should be and what changes you should make. And then obviously we look at that data set, and we have a lot of practitioners at Curinos that can help sort of analyze that and help our customers sort of understand where they sit in the market and how they should respond to it.
So we're talking right now about relative pricing. So it's the combination of the rate that you put into the market and then the associated fees and costs to a degree that make up that deal. This is also, you can also drill by channel and geography, right? So you can kind of,
that's right.
You can look at it maybe at the macro level, and then start drilling into channels versus geographies.
Exactly, because one thing that's very important with benchmarking is that you have an apples to apples comparison, right? So yes, you want to make sure that if you're comparing a certain geography or a certain type of product or a certain program, right, that you're comparing, for example, a very popular thing, doctor's loans, right? Like you want to make sure that you compare those apples to apples. If you compare that to the overall population, that might not be a good comparison. So yes, because we have transaction level data, you can actually drill down at that level. Obviously, we do mask it so that
Yeah.
people don't get exposed. So you have all the insight without the exposure.
Yeah, my use of the platform is 4+ years back, so I'm not giving away anything here. But we
Right.
would have strategies from time to time based on our relative service levels, and if we felt like our overall service level was in the top 15-20% of market, then we knew we could toggle back price, and in a relative basis, maybe we only needed to be in the top 40% versus the top 20% if our service levels fell to sub 50%. So there's a lot
Yep.
of dynamics in the data that I recall that allowed you to really be able to optimize pricing and optimize, profitability and margin,
Yeah.
and then at the same time have that additional lever for market share. So it was we were like I said, we had standing meetings 3 times a week to review the data and make very intentional pricing and margin decisions off of that.
Yeah.
Uh, Outside of the obvious in terms of helping lenders price themselves correctly in their market, what are some of the other applications and use cases that you're seeing your customers use your data set for?
Yeah, so especially in the current market, right, where everyone is struggling, one thing that people very closely look at is pricing exceptions, right? To
Right.
sort of say, hey, no one has the luxury in this market to let any deal go, but obviously you also want to try to price it as well as you can. So understanding what pricing exceptions are happening in the market, to what extent, I think is very, very useful when you have to make that exception decision to sort of say, hey, is this worth it? Am I going to save a deal here
Right.
without giving away unnecessary margin?
And so that could be almost in real time as someone's contemplating whether or not, to use an exception, price exception, right? They're able to tap the database and get some analysis.
Yeah, and again, you can zoom down to a specific geography, to a specific channel, to a specific product to sort of understand that, right? And not just at the high level, but actually sort of saying, yeah, what's going on here? And especially recently, we've actually seen that change quite a bit. So it's also not, to your point, right? You want to test that. You were talking about sort of 3 times a week. You want to look at that regularly. This isn't kind of like hey, every 6 months I do an exercise, I look at where we are. No, this is kind of day-to-day, hand-to-hand combat, right? You really want to sort of see what's happening in the moment. Am I going to lose this deal if I don't give this exception pricing, or the other way around, right? And sort of say, is this actually margin I can save?
I mean, it's we're in this, as you mentioned, it's a tough environment and a tough market, and so there's a natural tendency to want to win every deal. Certainly if you've put any level of effort into it, you don't want to have throwaway work, so to speak.
Yep.
But last time I checked, going underwater on a loan doesn't necessarily help the bottom line. So there's
Right.
You have to have the knowledge, and sometimes saying no is the best answer for your P&L.
Yep.
You got to have the information.
It might be the tough but best decision. Yeah.
Yeah.
The other thing that we do as well, we also do the same thing for home equity lending. And obviously the current market environment, again, with rates going up so high and so many people that have refinanced are now very carefully looking at, hey, what's the right product for me at this point in time? If I have a 3-handle mortgage, and because the market is stagnant and I'm not able to sort of move up, but I do need some more room in my living quarters, I might need to do a renovation. I might not want to refinance that 3-handle, right? I might want to take out the equity that has built up in my home, because there's a tremendous amount of tappable equity, right? You might want to sort of understand that is the better option. And then similarly there, we have information about rate and about pull through, about cycle time. So understanding that as well, we're starting to see More mortgage lenders also stepping into that, right?
Yeah.
Especially, it used to be very separate. The banks used to sort of take care of home equity lending, and the IMBs were just doing mortgage. We're starting to see a couple more actually of IMBs stepping also into that home equity space. So understanding that trade-off and what's happening in both those products, that's another thing that folks tend to use our data for.
As I think about the data set, roughly how many lenders and price, and their pricing structures are you looking at on a kind of real-time day-to-day basis?
It's always hard to benchmark the benchmark, right?
Yeah.
But we'd say that for like mortgage, we look. So let's take retail. I think that's the
Yeah.
largest segment. We're at about like 50% of the market, of the dollars that go on in the market. So there's a really significant portion, right? A statistically significant sample that gives you a really good idea of what's going on.
Yeah.
Similar amount for home equity. So it is real good coverage. Now obviously there's places where you have very local lenders that have a
Yeah.
large part of the market. That there might be some areas, but majority is national lenders, so it has a real good coverage of the market.
And because of that, because of your model, it's a cooperative model, right? So the if you have 50% of the transactions represented in retail, then presumably you have some of the absolute market leaders that are inside of your in the database. So they're reporting.
Yep.
They're not only reporting pricing from a rate sheet perspective on a daily basis, you're also getting that transactional production data as well for
That's
all
right.
the analytics and things of that sort.
That's right. Yeah. So you can really triangulate all the different metrics and understand what's going on. And I always sort of say, as much as people sometimes think that they compete with the lender across the street or in the neighborhood, it is very important to also have representation of the big names in banking, right? Because if you ask anyone, sort of name me 3 financial institutions, they'll probably name some of the top 5 lenders in the market, right? And not the one that's just around the corner, who you might know as a lender, right?
Yeah.
But that's not always who you're competing with. It's the people the institutions that are top of mind for consumers, where they might go for a second or a third opinion. And that might be their anchoring point to sort of say, hey, are you giving me a good deal or not?
Right. So when you're onboarding clients, lenders, what kind of, I can't imagine it's a massive lift for a lender to partner with you in terms of, I'm sure there's some data connections to move some data back and forth, but is it a massive integration to line up a lender?
So it always depends on how much that lender has their house in order, right? If you have good data hygiene and you have good things in good places and you understand well what each field means, that's usually the biggest challenge, right? To sort of say, okay, when we say this field is means a certain thing, well, what does it really mean, right? When we think about debt to income, well, what portions are included in that income, for example, right? Like if you think about that, so it's a combination of having the right data, having the right access to it, and then really truly understanding, because what is really important, again, for benchmarking is that apple-to-apple comparison. So we need to make sure that we're quite tight on when people send us a data field, that it actually represents the same thing as what we have, and that's for everyone's best interest, right? That it best compares.
Now, I'm familiar with the Stratmore Group, and they do some benchmarking as well. I think different. I think you're probably more complementary than competitive, right?
Yeah.
The platform, if I'm a lender and I'm subscribed now to the platform, is it as simple as I'm able to run an analytics like off a dashboard kind of in real time and truly understand kind of how I stack up in my market by product, by region, by geography?
Once the data is sort of hooked up, we have a whole set of dashboards that you can look at and sort of get your insights from. Obviously, sort of rate sheets are on a daily basis. the transaction level data is on a weekly basis.
Yep.
We find that works quite well. Obviously, there's like 1 or 2 days turnaround time to make sure that we check all the data, but that really gives you good. We call it near real time sort of insight into it.
Yeah. What else should we be thinking about as it relates to Curinos and how you're helping your clients today?
So obviously that for the mortgage market, that is a key element, right? Sort of this quantitative pricing, understanding that obviously we also help our customers with some of what you were describing, this margin management. So actually you can take the data. We have a solution that actually allows you to set some rules around it, right? And say, hey, I don't want to be this far out from the weighted average market price. And oh, by the way, I always want to be within this quarter and eighth of these named lenders, right? So we also have some solutions that actually help you with the workflow, to actually help you manage that margin. And then what we do on the other side of our house, we look at sort of more qualitative experiences. So helping customers understand what their digital journey, how that stacks up, and what sort of best practices are from an onboarding as well as a servicing perspective, and sort of understanding, hey, what is a good experience for customers? And so that allows for a holistic view. Now, maybe not for IMBs, but for banks, also very important to understand sort of the deposit side of the house, right? And so we also do similar benchmarking there for deposits and savings accounts, and sort of getting that 360 view of what's going on with customers, but the different products in the organization. So quantitative, qualitative, and across the balance sheet is basically what we provide. And then we have lots of deep expertise with a lot of practitioners that come from roles like where you were yourself. We have those on the Curinos team that can help really make sense and get the most value out of the data that we provide.
Right. Love it. Well, this has been super helpful for me to get an update on all things Curinos. Love what you guys are doing. I was a big fan, a big user of the platform back in my day. And congratulations on all the continued advancement and success of the platform and the product and the company. Anything else you'd like to share before we sign off today?
No, it was great to be here, and thank you very much for having me.
Awesome. Well, anybody wants to get a hold of Rutger and Curinos, we're going to drop a link in the post when we publish the podcast. Thanks, everybody, for joining today, and come back next Friday for the next episode of Fintech Fridays. Thank you.